Nvidia stock is down nearly 3% as I am recording today's episode. The main reason, there are reports that China is banning AI chips. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so if we take a closer look at what's happening on a very top level, we are seeing that Financial Times released that China bans tech companies from buying Nvidia AI chips. Now, this is rumors we have been hearing, I want to say, in the past month or so. One thing that was a little bit different this time was Nvidia's CEO shared some commentary. He said he was disappointed about what he read. This is one of the first few times with these types of rumors that we actually have heard something from Jensen himself. So we're going to look at that in a bit. But before we go there, I want to just share something pretty interesting. So about a little bit over a month ago, on August 10th, we had the reports that the United States is going to take 15% cut of Nvidia and AMD China sales. And the market was pretty excited. One of the questions that I had, and you can watch that video, was a potential H20 ban and pretty much a potential Nvidia ban. My thought process there, and again, you can go watch it, was I was starting to see a reason why in the future the China market would want to ban Nvidia from their chips coming into that part of the region. And now we're seeing this right now. Now, obviously, right now we're seeing kind of a lot of trade tensions. We saw just earlier this week, we saw kind of China says that Nvidia violated anti-monopoly laws after preliminary probes. We see China also did kind of anti-dumping on a lot of analog companies like Analog Devices and Texas Instrument. So there's just a lot of tensions happening between the United States and China right now. And this is just, unfortunately, companies that are stuck in the middle. Now, luckily, one thing for Nvidia is when they did give us guidance for this upcoming quarter three, so guidance in quarter two, they mentioned that revenue is expected to be $54 billion, plus or minus 2%. We have not assumed any H20 shipments to China in our outlook. Now, I want to go into the commentary here. So Nvidia CEO Jensen Huang commented after Financial Times reported that China has banned the use of the company's AI chips. So Huang said he was disappointed after the Financial Times on Wednesday reported that Cyberspace Administration of China had ordered companies, including TikTok parent companies ByteDance and Alibaba, not to buy Nvidia's RTX Pro 6000D, a chip that was made for the country. Wednesday, Huang responded that they can only be in service of a market if that country wants us to be. We probably contributed more to the China market than most countries have, and I'm disappointed with what I see, Huang says, but they have larger agendas to work between China and the United States, and I'm understanding of that. We have guided all financial analysts not to include China in financial forecasts, Huang told reporters Wednesday at a press briefing in London. Hopefully, that's the hopeful thing, right? It's all about market expectations and what the market believes would happen in the upcoming quarters. The company from earlier on did give us that they are not assuming China revenue. I think right now the stock is down, obviously, on this negative press. And you also have companies like, I meant to click AMD, like AMD down, because even though this is mainly for Nvidia, it's not just an Nvidia problem. It's an US chip company problem. China wants to reduce their dependency, at least of right now during these trade tensions, of USA chip companies, USA AI chip companies. They want to kind of showcase that they're strong domestically. So it doesn't matter if it's Nvidia or AMD, those companies will not be able to kind of get those products if this is true. Now, in the long term, in the short term, I believe this is more of a trading tactics. In the long term, if China wants to continue to develop in the AI market, they are going to need chips from either AMD or NVIDIA to continue to do so. Yes, they do have competitors. They have Huawei there. We have kind of the big tech players designing their own AI chips. You also have their manufacturing company, SMIC, also showing that they are progressing a little bit. I think even though those are there, the AI chips produced by US companies, the US designed by US companies and manufactured by TSMC are crucial for the development of AI. And right now, China is just using this as a trading tactic. And through the upcoming weeks, we will continue to hear this back and forth. I think, and we're gonna eventually hear, yes, the market is turning back on. No, the market is turning back off. Yes, turning back on and off, on and off, on and off. So that's what we should expect as semiconductor investors and as Nvidia investors. Regardless, we still saw $54 billion in revenue expected after the company reported, what was their revenue? I forget already for this quarter, about 46 billion. So an extra $8 billion without the China market. They still have strong demand. And we saw yesterday the massive AI investments in UK for the Grace Blackwell Ultra or the Blackwell Ultra system. So there's still plenty and plenty of demand for AI chips. So long term, not too much worried right now. Short term, it could create some volatility for sure. All right, next, I want to jump in here to fiscal.ai. This is the platform I use on a daily basis to get a lot of my research for semiconductor AI companies and so much more. If you want 15% off, make sure to check out my link at fiscal.ai/Jose. Let me just say it's extreme. I think it's pretty cheap for everything you get. Now, I want to look here for NVIDIA and take a look at estimates. More importantly, quarterly and billion dollars. And we're going to look at revenue here. So for this upcoming quarter, analysts' consensus right now is about $54.6 billion. There's a range of somewhere between 53 to as high as 58. The overall consensus, though, is pretty much in line with what NVIDIA has guided. So the average market is expecting the numbers that NVIDIA provided. And I do believe those, and like they mentioned, those numbers do not include any form of AI China guidance. So at least the average market or the average analyst is expecting these numbers, and there shouldn't be any changes. Now, during earnings season, depending on how the stock moves, it could be where the market is expecting higher than that. If it is, I do believe NVIDIA will beat those guidance by at least an extra billion or two, because of the crazy demand we are seeing for the Grace Blackwell and the Grace Blackwell Ultra, the GB200 and the GB300. I think it is possible to beat. But can they reach that 58 billion that we saw here in the range of closer to 58 billion? I don't know. That's a little bit tricky. I think that's only possible with the Chinese market. So it depends on how the market has priced things. And that's the hard thing about the market is you can try to guess what is priced in and what's not. But at the end of the day, after earnings, you get to see what really is priced in. Based on the action right now, there was some expectations of the China market. Now we're seeing that kind of de-riskify. As a long-term investor, for me, NVIDIA is still more of a small dollar cost average. And this is nowhere near where I would be loading the truck at all. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.